The information in this episode is current as of the date recorded and is not intended as financial, tax, or legal advice. You should consult your tax, financial, and or legal advisors before implementing any transactions and or strategies concerning your finances. And with that, let's get to this week's episode.
Hi everybody, Dr. B here with John G. Ullman and Associates. This is our weekly market update for the week of November 4th. If it's your first time, thanks for joining us. If you're a regular, don't forget you can leave your questions in the comments, and I'll always do my best to get back to you as quickly as possible. The goal for this series is to use my expertise in economics to help you understand the economy and the financial markets so that you can make informed financial decisions. So with that, let's get ready to hit the books and get up to speed on the markets. Starting with the markets from last week. Last week, we saw all three major stock indices down. All three were also down for the month of October, with the Dow Jones Industrial Average down about 1.3%, the S&P 500 down about 0.6%, and the NASDAQ down about 0.1%. Fortunately, at the end of the week on Friday, we saw a small rally, and some of those losses were recovered. But we're expecting increased volatility over the next week as the third quarter reporting season continues to play out and the election takes place on Tuesday of this week. The 10-year Treasury Yield continued to rise last week, reaching as high as 4.36% on Friday. We continue to watch the yield rise as an indicator for the economy and in light of the Federal Reserve's upcoming interest rate decision this week. The Bureau of Economic Analysis also released their third quarter GDP estimate. This is their preliminary estimate, meaning the first data that they released for the third quarter of 2024. This preliminary estimate came in at 2.8%, which was slightly below expectations, but it also demonstrated strong growth in consumer spending and in exporting from American companies to other countries. Unfortunately, it also indicated some drawback in the form of business inventory investment and residential housing investment. As we continue on a monthly basis to get updates to this value and this data, we'll bring those reports here. And as a point of note, last quarter, the first estimate was also 2.8%, but the final estimate for the second quarter ended up at 3%. So we may see some slight increase or decrease with subsequent updates. The BEA also released information on inflation this week in the form of Personal Consumption Expenditures Price Index. The quarterly PCE index demonstrated a drop in inflation over the third quarter from 2.5 to 1.5%. The monthly index in September also demonstrated a fall from 2.3% to 2.1%. The fact that both of these price indexes saw declines is typically a good sign in our ongoing fight against inflation. One sign that may cause a little concern, and certainly has us paying close attention, is that in the monthly PCE index update, we actually saw the core price index, which is the index that excludes the price of food and the price of energy, reported at 2.7%. Not only is this higher than the headline index, but it's also a value that this core index has been stuck at since May. The fact that the core price index hasn't fallen over the last 5 months is certainly a point of concern and is going to be an ongoing topic for these weekly market updates. To complete the economic trifecta, we saw the unemployment report for the month of October out of the Bureau of Labor Statistics on Friday. This month's unemployment report showed 12,000 jobs being added, which was a significant decrease from the September value of 224,000 jobs. We also saw a significant downward revision of about 112,000 for the months of August and September, which is normal As the BLS receives additional data and additional information, they're able to make a more accurate estimate and hence every month provide revisions to the previous 2 months. One interesting aspect of this report was that the unemployment rate didn't change and continued to remain at 4.1% for the month of October. We took a little bit closer look though, and we ran the calculations for the month of September and the month of October, and what we noticed is that the unemployment rate in September with an additional digit was actually 4.05%, which had been rounded up to 4.1. The unemployment rate in the month of October was 4.14%, which was rounded down to 4.1. So although the monthly rate didn't change, it did actually increase, but because of rounding, that increase was not observed. Big updates for this week are obviously the election and the Federal Reserve making their November interest rate decision. As far as the election is concerned, as of the recording of this video, the polls and the prediction markets are still too close to call, although currently former President Donald Trump has a lead in both of these areas. One thing that we can say with a high degree of certainty is that the Senate and the House will probably both have very small margins based on whichever party wins control. The importance of this observation is that regardless of the outcome of the presidential election, if the Senate and the House have very close vote margins, we may continue to see very little legislation and very little movement in either of these houses of Congress. From our point of view, the important information following the voting and the election is the impact that the new administration's policies may have on the economy and the markets. And going forward, we will do our best to bring that updated information and insight to each of these reports. Our guidance from this point is just to go vote. Make your voice heard and do your best to not lose sleep over the election or to make rash financial decisions based on changes in polling or prediction markets. Stay calm, focus on your long-term financial goals, and on the other side of this election, we will talk about the implications and the strategy moving forward. Immediately after the election, we'll have the results of the Federal Open Market Committee's decision on how the Federal Reserve chooses to change interest rates. Unlike the last interest rate decision, there is actually significant agreement between economists and the markets that this interest rate decision will be a 25 basis point cut in federal funds rate. Based on this consensus and the agreement between the markets and the economists, we probably will not see very much movement in either the fixed income or the equity markets, as the consideration of this interest rate cut will most likely already have been incorporated into the investment strategy of the markets themselves. Last of all, for this week, we'll continue to watch third quarter earnings as they're reported. This should be the last large chunk of companies reporting, although there are some, including NVIDIA, that'll continue to report ones and twos over the next few weeks. Up to this point, we've seen generally positive information from the S&P 500 reports, with the majority of companies demonstrating earnings per share and profit per share growth within their third quarter performance. We continue to watch as the overall balance of the third quarter seems positive. Estimates of the fourth quarter also demonstrate growth and positive results, but sometimes these reports include information that the market may take concern with. An excellent example of this was last week. Meta and Microsoft both reported exceptional results and beat analysts' expectations, but suffered in the market by a small amount as a result of concerns over the massive increases that they're making currently in the artificial intelligence space. Although these companies were successfully operating and reported earnings that exceeded expectations, the market took concern with the high level of investment and the potential that that investment may not return as effectively as previous investments had. So we continue to watch each report as it's delivered. We continue to study the S&P 500 results as a whole, and we will continue to do our best to bring both of those bits of information to you in these weekly updates. Looking to the future, as we continue to gather information about the third quarter and analyze estimates for the fourth quarter, we have much more complete picture of how the markets and how private firms have performed, which hopefully will allow us to continue to watch the market, looking for updates in real performance and real information, driving market trends. We also continue to watch the battle against inflation, of course, with regards to the Federal Reserve, but also regards to small businesses and the effect on households, the trade-off between slowing inflation and possibly accelerating unemployment. Also on our watch in the future, we are watching the manufacturing sector. It continues to be the weakest sector of the economy currently, and continues to be both optimistic about the future and a significant opportunity to see growth in both production and employment. Finally, as mentioned for this week, a lot of the attention in the economy and a lot of the attention in the markets for the next few weeks will most likely be around the election, the results of the election, and the implications of those results. Our goal is to try to understand what realistically can be expected and what realistically we should expect from the markets as well as the government moving forwards. And we'll continue to monitor these and report to you with as much clarity as possible. As always, we'll continue to monitor the economic reports and the movements in the financial markets to bring you up-to-date information so you can make informed decisions and do our best to keep you up to speed on the markets. Join us next week for our weekly updates. And if you found this information helpful or informative, don't forget to like and subscribe to the channel. Turn on notifications so you know when we've dropped new video content. And don't forget to add your questions or thoughts into the comments of the video, as I will do my best to respond to all of those. With that said, have a great week. Thanks for joining us, and we'll see you in next week's update.